There's a difference between stock trading and options trading. In this video, we will discuss these differences, and hopefully, by the end of this session, you'll gain an understanding of the unique benefits that options trading has over stock trading. Before we start, I want to clarify that I'm not implying that stock trading is inherently bad or unprofitable. However, I believe, and we all believe here at the Income Option, that options trading offers more flexibility and opportunities with fewer associated risks. Now for me, the divergence between these two types of trading boils down to two elements: leverage and choice. Options trading allows you to leverage your investments to your advantage. However, as we all know, leverage can be harmful if we misuse it. That is, if we overtrade, if we put a very wide stop loss, or if we don't watch our risk to reward ratio, something that we are very passionate about here at the Income Option. Basically, if we don't manage our risk, leverage can cause more harm. One of the main benefits of trading options is that it provides you with this tremendous amount of leverage to increase your returns while simultaneously minimizing the risk. The second element is that of choice, which comes into play when trading options. In contrast to stocks where your options are limited to buying or selling, options trading offers a variety of strategic choices based on your assumptions or your analysis. This is not limited to whether the stock will rise or fall, but it also considers whether it will remain within a specific range. And this is one of the scenarios that we look at very actively while we're trading. For example, let's assume that this stock is currently valued at 100 rupees. In a typical stock transaction, if the seller owns a stock and its value is 100, then the buyer can purchase that stock for 100 rupees. The 100 rupees is transferred to the seller and the ownership of the stock shifts to the buyer. Simple and straightforward. Now, to control 100 units of the stock, the buyer has to put 100 into 100 or 10,000 rupees. But as you will see in a bit, with options, the buyer can control the same number of stocks for a fraction of the cost. To illustrate this, let's consider a hypothetical stock. Let's assume it is currently trading at 100 rupees. Now I know it's showing JSW Steel, but let's assume we're taking a hypothetical situation. And this point right here literally represents the trading point or the decision point. You can either buy the stock here at 100 rupees, and if the market goes up, you will make a profit. Alternatively, you can sell it at 100, and if it drops, then you will also profit. However, as you can see, the point of decision is tied to this current stock price. The upside here is that you have an unlimited time frame to be right, provided of course that you can maintain ownership of the stock. So as long as you own the stock, you can hold it forever. So the biggest advantage in this scenario is the period that is working in your favor. Now, in options trading, you have far more choices. For instance, if you think the stock price will rise above 120, you can buy the 120 call. This action allows you to control 100 shares of the stock at perhaps 5 rupees. So 5 into 100, that's 500 rupees. So instead of spending that 10,000 rupees to buy 100 shares of the stock at the current price, you can spend just 500. Consequently, if the price is 140 at expiration, you've made about 20 rupees per share. That's 2,000 rupees on an investment of just 500 rupees. However, buying options is not my preferred method of operation and not the method that we prefer here at the Income Option. As an option seller, which is 95% of the time, I construct a strategy based on the stock's probable trading range. For example, I might build an option strategy that profits if the stock price stays between this 140 and let's say an 80 rupee range over the next month or two. So as long as the stock trades within this range, it can vary as much as it wants, but as long as it stays within this range, I will take in some premium on this trade. Now this strategy has, for instance, a 70% chance of probability of profit. This probability is based on the historical movement of the stock and the implied volatility, concepts that we'll come to in a later part of this course. In contrast to stock trading, where you're forced to make a decision, a 50-50 decision. So whatever people might say, with this decision, the probability is just 50% for the stock to go up or down. However, options trading lets you win 70 to 80% of the time, regardless of the stock's direction. This is why I prefer options trading over stock trading. And by the way, your probability of success in stock trading is always 50%. Anytime the stock price can go up or down. So don't let anyone tell you that the probability of one thing happening over another is any different. That's just the way the market works. It's always 50%. So to summarize, stock trading is unidirectional and capital intensive. As you can see, as far as investment is concerned, with stock we needed about 20 times more capital. Then, with stocks you're choosing one of two directions, buy or sell, up or down. That's it. Options trading, on the other hand, lets you leverage your investment, reducing risk while increasing potential profit. You can also profit from multi-directional moves in the stock. That's why at the income option, we believe that options trading provides a more competitive edge than trying to predict directional movements. So if you see this comparison chart, you'll see that not only is leverage working in your favor when it comes to options, but we can also choose the price that we want, the time that we want it for, and the probability of profit that we wanted to target. So everything is giving us that added edge when it comes to options trading over stock trading. Now, hopefully, this has shown you the difference between stock trading and options trading and how one is, in our opinion at least, better than the other. I hope you found this video informative, and I'll see you in the next video.